Okay, good morning. So this video is all about top analysis and my strategy aspects of trading. So I want to simplify it and make it straightforward. So one thing about I will explain one thing about my trading strategy is that plotting out a high and low. Two candles must have closed in that directions. That's why top analysis is necessary. So I also begin from the weekly time frame and daily time frame rather. This is where I plot out my high and low. Then on the 4 hours and 1 hour time frame, you have to observe for break of structure and wait for the retracements. Most times we have two entry levels, either the neckline break, immediate break, or wait for a retest. Then on the 5 minutes and 15 minutes, you should look for bearish candle closing around that level to take your trade, or bullish candle. Also confirmation of a structure change around that level. Look out for 1 hour levels very well. But if the 1 hour level tallies with the 30 minutes level, it's a sure POI. But not everything is guaranteed 80%, 100% sure in this game of trading. So at least you're looking at 80% most of the time. So this is my advanced strategy on gold. So the weekly time frame, let us imagine what happened this week. This point, let's take this point on the weekly as our low because two candles are closed in opposite direction. Weekly, we have, I know that this week we didn't have any weekly high yet. Let's say this high only happened this week. So we're expecting price that even price start coming down, at least on the higher time frame should come down to this weekly level support. So you have to know that the high is the resistance, the low is the support. So since price move from one level to the other, you must see signs that yes, this price will keep dropping to this level. Because you should know that if price keeps giving same structure, it should drop to that weekly level. That's one thing you have to put into consideration. On your daily time frame, we saw that price played around this daily support, this point daily. It was coming down, touched the first time. It touched the first time, spike up, came back again, touched again, spike up. So when he came, he broke it and he reached this level. This is another level for this automatically weekly level. Get the point now. So that is it. So we have marked out that level now. If price will keep dropping down, we mark out this daily level also. But if price decide to go up, the level we have was this high, but that was the weekly high. So we don't have anyone at the moment. So let us see what later happened. Because all the candles here, I see they were ranging. Because if they want to draw a new one, if you want to draw this one is the support. The open and closed. This one, second one closed. When price came here, let's mark out it. So if you wanted to buy, look at this support to buy in the market to the upside. When the market continue to sell, you'll see some reasons on the 1 hour and 4 hours time frame to see a structure for you sell. So what really happened now? So most times when price bounces off this daily level, it goes up. So I have to be careful of your weekly and daily because at the higher POI from a higher time frame and they have much more stronger confluences. So you now you should decide that this is support, this is resistance. You get the point. So if price keep dropping, you should come down to the net daily level support and weekly level support. See the point. But if it's going up, look out for resistance. Don't just turn this support into resistance. No, 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 no. That's what I've been doing and has not been working out clearly. Before you can turn any support to resistance, you must know that price has already broken below and started forming a resistance where it's going to hit and couldn't take out the high but keeps taking out the low. That's why automatically that daily level now cannot really hold the market, but there will be reactions around that level. So let's say this was a support you're waiting for market to reach. This daily support. So when it reached there, even went to spike up, created a resistance on the 4 hours, came back again and tapped that in that 4 hours resistance and started dropping. You get the point now. We're risking 100 pips. Most people risk more than that, but based on this strategy, I'm risking 100 pips. You can risk more than that or lower than that, but 100 pips. Let's see how it goes. So now, before market started dropping, this is on the 4 hours time frame. So when it spiked, after touching the daily line, it continued spiking up. So I was sure that price will come over to this 4 hours level. I was very sure of this one. So I was looking for a point to sell that market off. Market gave this one. This candle closed one, then second one closed. If you observe at that level now, price always played around that level. So after it closed, after price closed below, it went back up and touched it again. That's the retracement and started giving signs, started dropping down to this point. So the one of what happened around that time. So on the 1 hour, price really dropped, took out this low, dropped down. When it came back here to the test, let's say at that point you wanted to sell the market off to the 4 hours level. 100 pips. 100 pips. That trade took at least from that time, Wednesday, Thursday evening. That's when it hit TP. One is to my it came to that daily support level. So now how do we enter that trade? We didn't even get any 1 hour level, but that 4 hours level coordinated with the 1 hour level. This 4 hours level now, 4 hours level now, you're seeing it. Remember, it traced that point. It broke out first, it traced back, it came back again, closed. It traced back again around 4 o'clock, 2 o'clock. So in the 1 hour now, what are we seeing around that point at the 1 hour? That was like a continuation pattern. That was like a continuation pattern. How does the continuation pattern works? We observe this. When price came down, this level was the level he hold. He later played around, went back up, pushed down. So when it started going up, and also ultimately the fact that it actually tested there, started going up, but first card to close there, they tested back. So our after for this level, the buy didn't go as planned. So the price started coming down, and as it came here, he couldn't hold. He played around a little bit, suddenly he broke below and keep giving multiple rejections to this level. That was how price started dropping down. So I pay attention to this kind of stuff. It looks like a downtrend changing to an uptrend, and okay, we're not sure, and then it started dropping down. So that is it for that. So that point was like a how far was POI was like correlating with a 1 hour continuation pattern. Because if we were to trade this now around as far as broke out around 12 and it came back around 1. If we were to trade this buy now, this buy would have gone to this upper high. But it couldn't reach that high. So let's see, I want to trade that, let's see 30 minutes. I want to trade that market now. Those were like price played around that point. Hundred pips. That was like 1:3. Who knows whether to trade that? So the next day story will buy go. So don't think that price will go always all the time. I think it just went to a 15 minutes high. It broke out and it started dropping down. So that didn't play out. But our entry confirmation was just the candlestick around that kind. 1 o'clock it came back to the test. The day was it. 1 o'clock. He came back. This candle closed bullish above. This candle closed bullish. So that was how it's spiking up. Spike up. So the reversal happened when it started dropping down. It came to this point, took it out, came down again, couldn't take it out again, closed below. We tested it, and it came down. It went back to this point, broke it out, came back. Normally today retest to go for the up, but it didn't go up. Came down again and retested, and that's how it stayed dropping down. So that's how you know for reversals. So now how we took this trade now, this sell to the down part. So now when price tapped in that level, it closed bearish candle. Skin 100 pips as that candle close that point. It's that level. If you want to use structure, just like this candle close and then the 5 minutes. So this was like a normal structure safe. So when it closed, it went up, spiked up, came down, closed bearish, you entered. If you take for more confirmations, this was like a high, a neckline. It broke at this neckline, hit the PO high, came down. Instead to retest it and continue up trend, but it didn't, to show that yes, it will not be going up again. It came down, closed below, tapped in this level. I seen it. Came down again, tapped in the went in and tapped in the level again. It didn't reach this neckline now. Tapped in this neckline and started dropping massively. So that is the structure you should observe at your POI. If that say this is a POI for sell bias, and see what price did. Price went up, created this neckline, shoot up after your POI and came down, close below. Suddenly you test this neckline, then continue selling. Just like an head and shoulder pattern. The shoulders, this is it. That's what happened around this point. So you get now, you see what happened at that POI. Head and shoulder pattern. Shoot up. So me, I entered at that candle that closed. So if I wait for more confirmation, it should have been a point of interest for me to enter off this market. This point, safe, this candle that closed. Get the point. So that is just how the entry is. Even when price came back at that point, tapped in that level again, what really happened at that time? Let's mark at this level. Drag it. You are seeing that head and shoulder pattern still repeated itself again. I seen it. It's going 100 pips. That head and shoulder pattern still appeared again. So don't think it's too late. It's too late to enter. You can enter at this point. This candle that tapped in and closed. But wait for price to retest that point. So price came back and retest that point. Enter with 100 pips and you still make money. That trade started playing at around 3:25 in the afternoon. This one later came back 2:30 the next day. I seen it. So more opportunities. That's what you'll be looking at your POI levels. This structure. Observe this structure. The same thing for a support level. This is a support level. Price coming to a support level, created a neckline, retraced a little bit, entered the support level, shoot down. It didn't refuse to come and touch here to start doing up, just came down and retested it and started pushing up. So these are things you should look out for at a support level. Head and shoulder pattern. So it only works on candlesticks. It actually works. So even though I say let me place my entry here, 100 pips, I should come and tap in. So this is what would have happened. I will just tap it in and going. So it depends on what you want. If that's aggressive POI or you wait for confirmation, that's just the confirmation. So this is like extra confirmations, and that was how price. So that one was giving us even 1:8, while that one was giving us 1:9. So that is it. That's on the 5 minutes. Let me confirm from the 15 minutes if you are seeing any entry on that level safe. On the 5 minute price started dropping, came back, So what happened, Sha? To the neckline. Price broke the neckline. Tapped in the level, still retraced back again. Still giving the selling confirmation. It's even sold, sir. So the same thing happened here, sir. So the same thing happened. Same thing happened around there. So in 15 minutes it happened. How did it happen? Went on. How did it happen? Price went up, created a neckline here, came down, touched the POI, came down. Normally you have stayed after to buy, but it came down. You tested that point and closed with a bearish candle, started dropping down. So that's just it. That structure, pay attention to that structure. That is just it. So this structure is very important. Let me write it down. So that is just it. Let's go to the 5 minute and take that screenshot of that entry. That particular entry. So that particular entry was just what you just saw now. This is the structure. So this one happened again on the 5 minutes. So the thing is that wait for just be patient for that thing to happen to give you more solid confirmation. And you see when that thing happened, it broke and it tested around 11:25. He waited around 150. That's when he came and tapped in and gave that confirmation. So what is it? Have the patience and wait for the trade. If it does not align with this strategy, just leave it. What do you want to trade again? So as if they say, if you want to go here, follow through this gate and enter this compound. You say, no, I want jump fence. You might jump fence and succeed, but you might have injuries or you might defame your integrity. But passing through the gate shows that yes, you get the point. So if you start now to follow through the process, direct process, what you are being taught, than taking another route, that will be better off. You get the point now. So now this strategy now, why I'm documenting it is that you, myself, will be able to yes that when you see this kind of thing, say yes, I know about this very, very well. You risk that amount you want to risk. Not risking amount. If you're risking amount on your and strategy that does not look like your strategy, you're actually gambling in the market. This is not your strategy, and you're risking this whole amount. You are gambling. But when you see your strategy and you risk that amount you want to risk on that your particular strategy that showed off, if it goes to profit or loss, yes, you did the right thing. You get the point now. You did the right thing. If you follow your strategy and it either give you profit or loss, you did the right thing. That's just it. So now, let's go back to the 4 hours. So that was what happened. A breakout and retest the level of support, and it came back to that 4 hours recent level. That's the meaning of FNR recent level. So that point, you're expecting price, even as say giving down trend formation, should come to that point. So as it was coming down, it came down. So I don't like to talk about what happened around here because I observe now, even when I plotted the level here, even when it broke out, I see the Tesla started shooting back. So it came back up, did it like an uptrend, still went back here and started shooting down. So I think I won't talk about that one much. The trade is gone. So when price came there now, so that was like a daily support you're expecting to buy. You was expecting to buy from that daily support. I won't lie. You was expecting to buy. When price tapped in that daily support, you're expecting to buy good, buy good, buy good. This is 15 minutes. So even though you wanted to buy and you just see a bullish candle that closed there, you'd have entered for it. Is it not? Let's just check 5 minutes. Not daily level. So a candle that closed. You'd have entered for it, Abby. Let's see. You tapped in. This candle closed. Entered. 100 pips. Stop loss it. Stop loss it. Is there for more confirmations? If we waited for more confirmation like your 5 minutes level, so like you marked it out, you came back, you marked it out, you waited for retracements, you marked it out, it came down, you broke it down, it didn't play out well, so there has been a loss. So that trade was actually a loss on that on our part. So now, so that was actually a loss since the price is going down. So what you should wait for now, wait for candles to form. That's another thing. Wait for candles to form on your main level. That's your 4 hours and 1 hour level. So let's see. Price actually formed on the 1 hour. Let's see what happened. If it's to buy, you will know. If it's to sell, you will know. If it's giving a sell structure, to go for resistance, and on resistance, it will not try to break at the high. To go start to give you bearish candles for a sell to that weekly, that next daily level before the weekly level. Like what you are seeing here. The day level for the weekly support level. You get the point now. So when you want to say observe these two levels. So let's see. So if you go down to the 4 hours level, let's see what actually formed around that point. Around this point. So what actually formed around this point. So at least for our 4 candles for 24 hours, we are seeing that 6 candles must have closed for a day. So let's see what happened at the 1 hour time frame. So when price was coming down, price gave this level of support, this neckline, went above, came and tapped it, played around, consolidated. And you might know that you don't even know when market will consolidate. It later came around this point, tapped in this level and dropped. And that was like a POI. It kept on tapping that level. It kept on tapping that level and kept on dropping. Went again, that level, kept on tapping it, that 1 hour level, and kept on dropping. So most times after a massive drop, market tend to consolidate. Okay, not even at that point. I mean this point. What happened at this daily level? Yeah. This point. It went up. Sorry, rather, it came down. Went up again. It came down. What really happened here now? These two candles closed. They created this support for us. 1 hour. You see it? Not out clone this. So now as it was coming down, it was going up. Then you see, then you mark out, it came down, it gave this continuation pattern. So as it came down to this support 1 hour now, let's delete this daily level. Because the daily level is there. So let's see what happened around here. It came down. When price actually came down to that level now, what really happened? Around 8 o'clock, 9 o'clock. That was like a 1 hour support. And the next resistance, the next level was this level. The continuation pattern. Either price stop at this point or it stop above this point. So let us say, let's say we have another 1 hour level here. This is a normal high. Get the point. So that was like an extended 1 hour level. So if we are to buy from this 1 hour level support now, let's see what happened. Check 30 minutes first if you correlate. 30 minutes is gonna sweep all the low there. So on the 5 minutes, what are you seeing on that point? That's one thing you should understand. On the 5 minutes, what are you seeing on that point? On the 5 minutes, if you wanted to buy, Around 9:55, market closed bullish around that level. This kind of close above. So let's observe first what really happened around this point. The market tapped in that level of support. This was like a neckline, went, tapped in, started dropping down. This was like a neckline, it broke it out, tapped in, dropped, tapped and went up and came back and dropped. Let me use this. So what did happen? Price came, tapped, went up, tapped, came back, tapped, came down again, took out this low, tapped the low, came down again. But it's coming to this level, came to that level. Let me understand from this point. As it tapped this level was like a support level. It went up to that 1 hour level, closed above, came back to tap it. So most times this might be a critical step for you to understand how this market works. So this was like a neckline. Now this is just simplify it. The market reached a final neckline and it broke down. Came back up, closed above, break down again. One thing is that it should close above. If it closes above and started dropping bearish candle, I don't enter it. It must close above and continue going up. Telling us that it's not taking low again. That previous low that was 400 supposed to retest it to make it like a support stone resistance for a sell. It didn't. It went back up. It should continue going up like what happened here now. You see when the price came back, it went up. Suddenly came down. I seen it. At this point, you would have entered for this kind of close bullish and take it up. That was around 10:25, 100 pips. They also stopped out. By the ways, if not that, let's look for interest in back testing. So price consolidated, so we are aware. So the price did this, created this neckline. So for you to buy that market, price will take out highs, create a neckline, close above it, retraced back, went up and close. The center point is this neckline, went up, continue going up, touched the level, 4 hours level, came down all the way to that 5 minute support level. You get the point. Touched it, couldn't take out that overall low. Suddenly start buying 100 pips and taking it to that recent 1 hour. That's 1:2. So if you take the 50 minute, what really happened on the 50 minute around that level? On the 15 minutes. Just like this. The neckline formed. Price went tapped in the neckline. And take to that point. So if you do 50 pips if it would have been even better off. Because around this point, 10:30 when price tapped in that level. So because the risk reward was very, very small. So when price tapped in that level, they're going massively well. So that was just it. It was out. Any points, they go massively well. So most times 15 minutes is for extra more confirmations. Observe what you should observe on that 15 minutes, just like what I just explained on that neck and shoulder. So happened there. You get the point. Breakout, came back, couldn't retest it, close above, tapped it, like more like a continuation pattern. Let's use line in this case. More like a continuation pattern comes, taps in, then shooting up straight to that point. You get the point, 1:5. So let's say we use 70 pips stop loss. 70. 70 pips stop loss. Point to 3.7. That would have been a hit. So I did. So at this, even at this back testing, we can choose to reduce our stop loss to 70 pips or 50 pips. Depending on what happened, then that's what you can be using. You're seeing it. It gives you enough breathing space. So that was it. That was it. So even what happened here? They give you this 70 pips stop loss. Let's buy 7,000, 7,000. You know, gotten stop that initially. So stick to 100 pips stop loss. 100 pips is okay. That one will give us. The short of the trade can reach 70 pips or below that. But not 50 to 200. That's just how your pick will be. So that was like a 1 or say 2.6. So going back to the 1 hour time frame, play that to that resistance. When you go to that resistance, you're looking for a sell. It around 1 o'clock, 2 o'clock, you're looking for a sell. That sell from that resistance, you should observe that if price take out that high, it's going up. So if it started coming down, that means that place will no longer hold. It will be coming down to the next the next daily level. You get the point now. So you know that that's the next daily level it will be coming down to, which is this point. If price should not hold, it's coming down to this next daily level or this one. So on the 4 hours now, what do we see around that point? So then we have the 4 hours level, 4 hours level high. That 4 hours level high was in between the 1 hour, you get the point, the 2 1 hour. The 4 hours level point was in between the 1 hour level. So that's where we should be seeing reactions of from. So on the 15 minutes, let's see what happened. Let's see what we see a continuation pattern on the 15 minutes. That would have been our extra confirmation. That's like a continuation pattern, head and shoulder pattern. So this was it. That low. Suddenly price closed below. Price went up. Continuation came down. That level tapped in and stayed dropping down. So now let's see what will happen on the 15 minutes. Let's see what happened on the 5 minutes now. On the 5 minutes, let's see what happened. When price finally hit our TP, we went up, we extended also to that 1 hour level. Played around. So if we start directly from that point now, the other upper 1 hour level now, 100 pips. You still be on the safe side. You'd have hitting out. But instead, now looking at that now, you plotted out your normal neckline and that 4 hours level is correlating. Price reach show bearish move, could take out that high after touching that 1 hour. So this point as a close bearish, we entered it 100 pips. We will be on the safe side. TP hit to that daily level B. This daily level support, that's like 1:9. TP hits 1:9. TP hits. That will happen around 1:45. Isn't it? Very simple. It started spiking up a little bit. As it spiked up, it actually created our neckline structure, this one here. So if price should go up and it couldn't take out this high, it came up, it later came back down. Instead to retest this point now, like as if it wants to go up, like a breakout at the test back to go up. Instead, it came back close below entered again and closed below even when it came back again to that level. So you observe now that level was a point of interest on the 5 minutes. Price even tilted with the week and start even dropped more down. So one thing you should understand that yes, you see that neckline price broke out and it started going up, it should come back for a retest. If truly that point now should be turned from this, that was a resistance. That's the 4 hours. That's like 4 hours point of POI is there, 1 hour point. So that was like a level for you to sell off. There was a level for you to sell off. This level was a level for you to sell off this market. 4 hours, 1 hour level, 2 1 hour levels are there. That was like a short POI for you to sell off from that point. Get the point? So when you sell off there, look for candlesticks, look for resistance level on the 5 minute and up. But if you firstly is candlestick, you see the first time we enter with candlestick as it closed bearish, it hit us out. You get the point now? It hit us out. Secondly, now we waited. That 5 minutes high he formed, he didn't break it out though. He went and touched it and closed bearish. We entered it. So yeah, gives the engulfing candle out of the neck, he broke out of the neckline. All you wait for is a retest. If you retest that neckline and give bullish candle closed, it's going. But instead, it closed below that neckline and retested the neckline. That's one thing you observe. It closed below the neckline and retested the neckline at this point. At this point. See this point now. It closed above the neckline and retested it, entered it, and drops. Even when it drops down, it still came back again, entered again, and wicked down. Even at this point, there's even another entry. This point safe, wicked down. Another entry again. Nine times three. 7 reached to reward. That was how it played out. Just understanding structure and POI's level. 1 o'clock, 2 o'clock, 2:50. So that was how that price played out. So from that 4 hours high that played nonsense play. Just now that's the POI for a sell. And structures must confirm it is sell. If not, leave it. Resistance for a sell, support for a buy. It broke out and that was how it dropped down to that daily level. Still on that daily level as it dropped down to that daily level. So we're like, this level has been touched 2 times. This is the third time that level has been touched. So the level should keep coming down. It's going to come to the next daily level or that weekly level. So how do we know if it's going to come down or it's going to go up? Actually, I was expecting two movements because I don't expect because I was expecting like this was like a 1 hour candlestick. This was like a 1 hour candlestick making a continuation pattern. I was expecting to come around this point, but it was not giving that structure. It was all the resistance on the smaller time frame. It was resisting it. So let's see what happened on the 4 hours. So we are expecting to come down to the daily and weekly points. Let this video be long. As far as I can drop everything that concerns my strategy here and keep on watching it to understand the market, I'm good to go. So that is it. Looking at that point now, and the price has dropped. So when price reach a level, if you want to enter, you can enter the, but don't just enter like that. You should wait for price to start forming on a smaller time frame. So now let's see at the 1 hour level now, you had that breakout from that low, this low. I see it, you structured the low. So price came and took out the low. What you're expecting is a retest to that point. Price came down and played out a consolidation pattern in that midnight Asian section. You see it. It's going to broke out about around 8 o'clock in the evening. Closed with it and played around. So it was around 7 o'clock in the morning. It tapped in this level, and if it tapped in that level, normally should come to your mind is a selling point. It's selling, that's a selling zone for you by 7 o'clock. The 100 pip stop loss. Get the point. And where is selling to now? Selling to the recent points. 1:3. We are selling down to that weekly and whatever points. So let's say that you're expecting, and we'll check the 30 minutes, and if it correlates fine. So that's the short POI. 25 minutes, what candlestick should you see there? You have entry, just keep a candle, you look for confirmation. So that you have two. One is the confirmation, look for candle to close bearish in that direction or bullish in that direction you want to take the trade. Second, you should wait for structure. That structural neckline, head and shoulder should form around that point. So let's say on that note now, you waited, price came and tapped in and suddenly closed bearish, you entered, started dropping. As it was dropping, it later came back again. When it later came back again, it seems he hit us out. Okay, he did hit us out. Yeah, morning. The price kept on dropping. Suddenly, as it was dropping, so it was forming some 1 hour level high as it was dropping down. Let's check the 1 hour time frame. Let's check the 4 hours. Let's see what happened. 4 hours level, I was seeing like a continuation pattern, but it kept on tapping and kept on giving consolidating moves. Then that 1 hour POI. So now price kept on, even when price came back up, like a continuation pattern, it shoot up, came down, reversed back down again, went up, came down, reversed back down again. Couldn't try selling, but couldn't sell. Went up. So let's see what happened. So now let's say you have the 1 hour high. So let me quickly round it up on this to make it simplified. So price created a 1 hour level high there at that point. So if it came and hit us out, let's say hit us out at this point. The entire market around Monday came around the back at the afternoon, going down. Suddenly Tuesday morning came back. So that is 1 hour high there. Came back. So looking to sell off this point. Look at what happened there, self. You have to do structure. That was like a high. But looking at this point, the continuation pattern. This is a low. Continuation pattern. So I'll take this as a low. So price came to a low. Came back and retested it. So let's see how this entry is possible when price came around this high. He gave us a confirmation around 3 o'clock. 30 minutes. Most times it might not be clear. So 5 minutes. Around that point. We're having this high. Then price tapped in, kept on going down, tapped in, kept on going down. So it was like going up, shooting up. We were risking 100 pips at that level now. To still hit us out. Let's see 1 hour. Something new there under 1 hour. So if you're doing analysis, something new under 1 hour. So look at this 1 hour now. So this continuation pattern. So looking at this is a continuation pattern for me. So my expecting price once it closes above is it. So it's coming down, you should looking at this suddenly, but ultimately this point, if it comes here and it closes below, if it's coming all the way to this point, it starting that level around 8 o'clock, 9 o'clock, around 2 o'clock and dropped. So let's just see what happened around there. That point was a valid point. Seen it. Neckline broke out, it was come down again. And it came down and shoot out. So that 5 minutes, you see 1 hour, just pay attention to that continuation pattern. It happens most of the times. When price sell price dropped. So don't panic when price is dropping. After a long move, your entry should be when it comes back to you and carries you along with the pull. Just remember that any pull up or pull down, any pull up, after every pull up, wait for it to retrace back. That is the statement that will take you to, you get the point. Great end. So now at this point it tapped in back again around 8. So expecting it to drop massively down. So now with your 100 pips, that should be enough. That should be enough. Yeah. When it came back, it could even go farther than even 50 pips safe. So it came down. Even when you entering at this point, kind of close bearish. Could even hit you out safe. Played around, just tapped in, and if you choose any neckline, this was like a neckline. Couldn't break above from close above, it was going to be quick moves. So that was how it played out. That was like a 1:14. Yeah, the point. So that was just how it worked. Even when it came back to that point again, this level, as it broke out from the neckline, it came down close below, tapped it. So more confirmations were around, just sitting around there. More confirmations were around, sitting down around there. Taps in, close bearish. Most times I just, most times if I, let's say if I see this kind of thing, what I should look out for information is like a, this level was a 4 hours level. It was happening around what price downs around there. 1 hour, what happened around there. So the price actually consolidated. It's overall high. It didn't reach, I'm trying to reach, it didn't reach. So at this low, it was consolidated around the low. Consolidated around the low, suddenly it broke the low. Waited for retracement, which it happened, but it didn't move, just shot up above. When it even broke below, it didn't come back to the test. That was how it kept on. Even this 1 hour low now, this 1 hour support. After it touched it, let us see for support like we know that the price should get taken out close. Now this 1 hour low support. That is with 30 minutes, yes. When price tapped, it wasn't even happened. 15 minutes, no structures. 5 minutes tap. So it broke out with neckline. That off that move, and that was how I joined the move. Making it tired a little bit. Just 13 yesterday was smashed. So that is it. That was how price played around to that point. So looking at what I'm seeing here, let us see. So daily price smash all those points. Then on the weekly time frame, we just saw another weekly level. I have this one. I'm sure of this one. If I keep on giving downtrend, it should be going down to that weekly. Let me just clear my charts. Clear my chart. Do analysis for today. Most times, just wait. All these things have been told, wait for it. So we have this weekly level support. So price is a continuation pattern. So price actually come down here.
this point. So the price will react here also. So you have click on it. You have this is supporting proper from early to close. So you have this high. That is it. So if price is break that weekly support coming way down, you can continue. So now if you start going up, you get to react first to this point. Price will react first to this daily level. It's coming up. But at this point now, it's just at that weekly level playing around. It comes down, it will come down to this daily level. There's daily level here. It's a daily level here. So for the weekly overall weekly support is expecting to corner. So now main levels, I see that weekly level that we plot out, it seems it was the main 4 hours level and price just playing around that support level. That's what you should do. So let's see. These points that price broke out from, let's not go back there. Here now is a valid 4 hours level. So let's say price is coming to that point because if it keeps giving up high moves, it's coming to that 4 hours level and it will not come down until it gets to that point for a sell or changes to a buy uptrend. So when it tag that point, so you are seeing it's going to that point, when it tag that weekly level, that weekly support level, because you know it's going to that 4 hours point and it tallies. So now what happened here now? Look for a support. So if you didn't buy around this point when it tapped in, you see now price close here. It must be at your wonder. What for a wonder what candles to form. So now when they form, the candle close low, that's the support. First candle close, second candle close in that direction, and the third one now around 4 o'clock. It came around 4 o'clock, it came at this 1 hour level support and risking your 100 pips. Risking your 100 pips. Let's see what's actually from there. And which will be your first TP before the overall. This point is heading on to 124. 30 minutes correlate with that, yes. Then 15 minutes. 15 minutes, I'm saying that, yeah. Alternation, it came down, spiked up, came down a bit, played around, spiked up. It didn't come back to that point. So let's see it. So let's see 5 minutes. What really happened in 5 minutes? Let's see what really happened at that point was like to the neckline. Like what I say that at the POI, this is like a neckline. Yes, price broke out. The same thing happened here. So we came to tap here. Missing on entry. 20 pips safe. 100 people are what we want safe. It's 100 pips them. Time you would have edited out safe, but you're ready for confirmation and just tapped in and tapped it there. So I think really worked out. The price played out very well for it. Right, so let's see that was how what I want to was level and bam, it tapped, closed 10 pips. So that was how price played out. Significantly well. Still playing. So now if I was to enter this trade again, so I have to wait for the support. So yeah, he didn't retest this point. He kept on going forward. He kept on going up. So now if price was to come down, we would have had this point now for him to retest. Yes, but he came to this high. So at this high now, if you are wanting to enter this trade now from this high now, you are going for a sell of these points down to this 1 hour level. $100 pips. So how would we have entered for that trade? Still only 15 minutes. 5 minutes, even when they close bearish. Enter it. That would have been a 1:8. After that, 1 hour level support. Having one candlestick looking at the replacement. Let me show you. Okay. retracement. Take 1 is to 8. There was adjust it. Wait to that 1 hour level. You couldn't take out that high because most time when you take out a high, wait for that pullback to that level, you just broke out from. Then you take your trade. This is how the strategy is very simplified. So if price will continue going down, you must take out low first and wait for a retracement. But now, when it comes there, you can look for a buy. I might take out that high, 100 pips. Then head over to that overall for whatever you're expecting, or kept on shooting downward. So that's just it. Once price comes to your PY level, let's wait for candlestick confirmations, which I mentioned too. We have 3 entries. We have the immediate entry. Just keep your alert there. Where it's reach, you can enter from that point. No confirmation, just enter. That is for you. But when you see candle closes at that resistance, a bearish candle, or that support, a bullish candle, that's first confirmation entry. Second confirmation entry, you didn't catch that other first one earlier. You wait for it to form that structure of the pattern I showed you earlier. You have to do. Thank you. So I'm sure this trade is playing out to a 1 hour level, high resistance, 5 minutes candle close, bearish, and that was how it kept on dropping way. That took out this low, played that high, took out the low, and kept on dropping back then. So this is like 1 to 8.5 trade. Taking the trade now, you have phase one on your account, almost 8% on your account. So that was actually, so trading is very, very actually simple. Just wait for that thing to form. Then you take that trade. That's just how it works. Thank you.